Welcome back. Here's a look where markets ended another wild week as stocks whipsawed through sell-offs and rallies fueled by mixed expectations over a looming recession. After the major 1,000-point decline on Monday, the S&P 500 logged its best day since November 2022 on Thursday. Joining me right now to walk us through it is SlateStone Wealth Chief Market Strategist Kenny Polcari. Kenny, great to see you. You always give a recipe in your market notes, and your latest recipe is for a martini. Are these markets driving you to drink?
They absolutely are. Listen, the volatility that we saw on Monday certainly started by the Japanese carry trade. It had to happen. There had to be some catalyst that was going to ignite that fire. We've all been talking about it. Valuations have gotten way stretched, not only in technology, but in some other parts of the market. And so we needed something. That just happened to ignite the fire, and then it created chaos and panic. And then, as we know, algos jump in, and then they start just selling stock. They rush out the door, tripping over each other, trying to sell stock. And so it causes that volatility. And then the whipsaw up, the whipsaw down, the whipsaw up on Thursday really was quite dramatic. So I don't think investors need to worry so much that, this is the end. It's not. I think there is going to be continued volatility as we move through September and October, which is a seasonably weak time of year anyway in the markets, and people should understand that.
All right, so talk to me about inflation in this upcoming week. We've got PPI out on Tuesday. We've got CPI out on Wednesday. Will these be big market movers? What should we be focused on to that end in terms of slowdown?
Well, I think they're actually both expected to come in a tenth of a percent better than last month, right? So everyone's going to make a big deal about that and say, oh, look, we got inflation down. But then this whole idea, like we saw earlier in the week, that there had to be an emergency Fed meeting and, oh, my God, we're going off the edge. I think that will certainly calm those fears down. I don't think we're going off the edge at all. I think if we get that better than expected CPI and PPI, it will just reinforce the idea that, in fact, the Fed is right in taking their time and monitoring it and not reacting or overreacting and becoming so emotional. So I do expect that those numbers are going to be better. I do expect that that's also going to help us put a floor and maybe calm this volatility down. But I still don't think it's over in terms of the trend in the market over the next couple of months.
So how do you want to allocate capital here, Kenny? I mean, I don't know if you saw the Fund Strat note on Friday. I was talking about Thomas Lee's note where he said that there is evidence growing that equities made their summer lows on August 5th. And then there was that positive reaction to the weekly jobless claims. He said that that weak July jobs report that sort of set everything off was largely due to Hurricane Beryl. So he thinks, we've seen the lows and we could have lots of volatility, but at this point, the worst is behind for the summertime, even though I know August to October is usually a rocky period anyway.
Right. So, listen, the lows may have been the 51.16 that we hit on Monday. That may be the low, but that doesn't mean we're not testing it again, right? I don't think that's over. I think, in fact, we do test it again to make sure that it really holds there, right? And so, in that case, you have to just think about if you're allocating new money. I become, and I've become a little bit more defensive, right? So while I hold my tech names, I'm not adding to tech unless, of course, we see dramatic moves down. NVIDIA's off 30%, or it was off 30%. Until Thursday's rally, but it was off nearly 30%. I thought that was a screaming buy, right? So you add a little bit, but you also have to become more defensive. So consumer staples, utilities were names that I continue to add into the portfolio.
All right, so you want to be adding to those areas where you know that there's growth, but there's also perhaps some good valuation opportunities because they've traded down in this mess.
Correct. But there's also, like in consumer staples and utilities, there's also, that's a naturally defensive sector. And if rates are going down, utilities are going to continue to benefit. Look, NEE, NextEra Energy, that's still down 12% from 2 years ago when they started raising rates, right? So if they start to cut rates now, that's going to continue to improve. And so I think that's one of our holdings. That's one of the names. It's a key name. I think it's a great stock. And it's a great dividend payer.
Yeah, that's good point. You might want dividend payers if, in fact, we're going to see rates go lower. Maybe you want to get the income from the other companies that are actually paying and growing their dividend.
Absolutely.
Kenny, it's great to see you. Thank you so much.
Always a pleasure. Thanks for having me. See you soon.
Pleasure is mine.